Hello everyone, it's Khalid. This is the Daily Pitch International Breaking News section, and today we will be discussing the FOMC Minutes meeting. If you haven't liked and subscribed to our channel, let's do so and move directly to the economic calendar. Before that, I wish everyone a Happy New Year and Merry Christmas, wishing everyone the success and health for the next year. Let's look at the economic calendar. As we can see, December 30, we have the FOMC meeting minutes. To summarize or to differentiate between the minutes meeting and the actual meeting. The minutes meeting is just a summary of the last meeting that took place. So let's move on, see what happened in the last meeting, especially that it was very important. We had a rate cut, we had the dot plot, and we had some Fed members that were against the rate cut and some Fed members who wanted more rate cuts. So looking here at the press release, I will move to this section especially. We can see that several members were voting with the 25 basis point rate cut, which was originally priced in the market. But we had Goldsby and Schmidt who preferred no change in the rate, and we had Miran, who of course he is related to the US President Trump, and he wanted a 50 basis point rate cut. So this is number one. That's why it's very important. We have to see in the FOMC minutes that is there any details that were not published back then, how the members who are dovish, who are hawkish, and in case we have something new that we didn't know during the last meeting, which was on December 10th, this could have an impact on the markets, and we will analyze what will be the impact on the US dollar. Before moving to the chart, let's have a look at the summary of economic projection. The summary of economic projection, what was interesting is the GDP. We can see that in September meeting, the GDP for 2026 was expected to be or forecasted to be at 1.8%, but with this meeting, it was moved up to 2.3%. As for the unemployment rate, no change, 4.4%. Currently, the unemployment rate in the US, we are at 4.6%. The PCE inflation and core PCE, the numbers are not revised, but projected lower from 2.6 to 2.4, and here from 2.6 to 2.5. In addition to that, if we have a look as well, how do we read this one? These are the number of Fed members voting what they expect or what they want to be the interest rate for next year. We can see that the markets are currently pricing in around 2 rate cuts. Previously, we can see that all these members for 2025, they wanted the interest rates to be at this level, 3.5, 3.75. Here, we can say that we will see around 1 or 2 rate cuts. Of course, this probability is subject to change if we look at the CME Fed Watch. Depending on the economic data, that could change these percentages. For January meeting, the expectation that we will see no change. A lot of analysts said that this rate cut that we saw during December was a hawkish cut. What does it mean? It means that the Feds gave the markets what it wants or what was priced in, a 25 basis point cut, but the tone of the Fed was slightly hawkish. Anyway, let's move to the dollar index and see what is going on. Looking at the dollar index, after the dollar index retested several times the level of 100 to 100.2, and I mentioned it previously that this level is where, especially here in August, where we had the NFP numbers that was lower than expected and the previous were revised aggressively. That's when we saw a strong reaction moving down to the approximately 96 to the 96.5. Currently, with all what we are hearing regarding the Fed expectations to cut rates, regarding inflation numbers dropping down, let's see if we can have a look at it quickly. Maybe you can see it here. Yes, we can see that the CPI came in lower than expected. It was US CPI. First, the unemployment rate, and this is very important, the unemployment rate came out at 4.6%, which is higher than previous and higher than forecast. And then we had the CPI numbers, which came in lower than expected. The core CPI year over year at 2.6%, the CPI year over year at 2.7%. So the market expectations to see additional rate cuts during the upcoming year of 2026. So how the Fed's meeting could impact the dollar index. Number one, if we see any details that was not announced back then and the tone is hawkish, this could give the dollar index some slight upward movement or bullish momentum. What does it mean? It means that we can see that the dollar index could be moving like this. Let me fix the lines first. Yes, that's more clear. We can see that the dollar index could be moving like this. My first area of interest, I will monitor the reaction at the 98.3 approximate. In case the market absorbed this as really hawkish, and in addition to the technical area we are here, we could be retesting once again the 99 level. The next scenario, what if the markets or what if the FOMC minutes meeting showed us some dovish comments? Several members want to see a rate cut, keeping in mind that in May next year, Powell period will finish and the US president is currently looking for a new Fed chair. And most probably, if not 100%, the new Fed chair will be supporting rate cuts because he will be related to the US President Trump, who is known to support the lower interest rates, and he openly announced it several times that he wants lower interest rate in order to support the economy. Scenario number two, what if the FOMC minutes showed us some more dovish comments, giving us signals that the Fed could be more aggressive in rate cuts during the upcoming year? In this case, and in case technically we were able to break below the 97.5, I believe we could see the following. And the next area of interest, a very, very important area, is here the 96 to the 96.5. We can see when the dollar index retested this level several times, it was unable to break it. So I will keep an eye at the 96 to the 96.5. The final scenario we could have, what if the FOMC minutes was just, not say neutral, but there is nothing new announced. In this case, I believe the dollar index, especially keep in mind that we are at the end of the year, a lot of bank holidays upcoming starting this week and next week. We could be just consolidating within this range, waiting for the new year, waiting for the new economic data and the new fundamental catalyst that could give us a more clear direction related to the direction of the dollar index and all the financial markets in general. We will be doing this in orange. So guys, I just wanted to make this short video, give our analysis on the FOMC minutes. Hopefully you enjoyed this video. Don't forget to like, subscribe to our channel, and we will see you with the new additional analysis. Thank you so much for watching and take care.